Thanks for joining David, Kevin, and myself for the market update for the month of June. Hope you guys are enjoying some of this absolutely beautiful sunshine. I'm looking forward to doing it myself after work. We saw a little bit of a slow start in June, but it definitely picked up as the month went on. The US market, again, has been powering everything. It grew at 3.47%. The Canadian market was slightly off, and Asia and Europe was also slightly off. Kevin, what was happening in the US market?
Well, the first half of 2024 came to a close with news that inflation in the US has continued to fall in line with expectations. The Fed's measurement of inflation, the Core Personal Consumption Expenditures Index, declined slightly from 2.8% to 2.6% over the last 12 months. And as we step into the second half of the year and enter a new earnings season, it's worth noting that profit growth expectations, while still high, are coming down slightly for the second quarter. Expectations are now in the high to 8% range, which is down slightly from the projections at the beginning of the quarter. We also saw the U.S. job report for the month of June just released, and it showed that unemployment has ticked up very slightly to 4.1%. And what this shows us is that the U.S. job market is cooling a bit, but not cooled off. Now, all of this data would support economists that have anticipated the U.S. will see a rate cut at the next Fed announcement at the end of this month, but we'll have to wait to see whether all of this has moved the needle enough for the Fed to make that conclusion. Harry, what's been going on in Canada?
Well, Canada, the Bank of Canada cut interest rates on June 5th. So, of course, everyone thinks, okay, here we go. Things are going to just start dropping. But the numbers of inflation came in a little bit higher. They were 2.9%. So now most of us are expecting the Bank of Canada to probably hold interest rates where they are. Again, we're not concerned. The trend is definitely going to be downward, but it's just a good reminder that just don't expect everything to race down. The race to get back to a 2% inflation rate, it's going to be slow but steady. We're going to see ups and downs in inflation. It's just not going to race all the way down. But the long-term trend is definitely going to be downward. Some of the factors that happened that caused inflation to go up were we had an increase in the cost for services, groceries, gasoline, and rent prices. But overall, like I said, definitely the inflation rate is on a downward trend. Just don't expect it to race without a little bit bumpiness on the way down there.
Yeah, and as Harry mentioned, market volatility is a given when dealing with financial markets, but as we've discussed in the past, the key to successful investing is to remain invested through these types of periods while you let others kind of knee-jerk react to these temporary events that are occurring. But as always, if you do want to discuss your portfolio, a financial plan, or just the markets in general, Harry, David, or myself would be happy to chat with you. Take care.
Bye-bye now.